Hi, this is Greg. In this video, I'm going to talk about how I trade stocks and how to time your market purchases so that you maximize your profits. And if that's of interest to you, stick around because it's coming your way. Okay, welcome. So for those of you who are new to the channel, we talk about business and investment. And in particular, in the last couple of months, I did, kind of like a series called Should I Buy This Stock? Where I looked at 4 different stocks that came on my radar screen and I made some recommendations as well as analyzed the stocks. But what I want to talk about on this video is timing and market timing and the different tools that I use to determine if the timing is right to buy a particular stock. Now, the reason why this is important is because many times you make a lot of your profits based on when you buy a stock. This is true in any investment, but it's particularly true in the stock market. So it's very important to understand the different tools that you can use and that the pros use to time your purchases to maximize your profits. So before we get started on the timing techniques, I want to take a look at the last 4 recommendations I made on this channel, when I made them, what the prices were, and what they are today, so we can look at the performance on those particular recommendations. Okay, so here are the recent recommendations that I made on this channel, going back several months. I did, as I said before, I did this series, Should I Buy or Should You Buy the Following Stocks? And I think I'll continue with the series because it seems kind of popular. But anyway, if you look at my recent recommendations, the first one was ExxonMobil. That was made on October 10th. As you can see from the chart, the closing price on that day was $33.82. Today, which is 12/2, December 2nd, the closing price was $39.94. So that's up quite an impressive 19.5%. And that's not including the 10.4% quarterly dividend I will be making during that period. Of course, it won't be 10.4%, it'll be 10.4 divided by 4. But that return is not including the quarterly dividend, which I will be receiving on December 10th. Okay. Chevron was the second one. That one, that video was released on 10/22, and the closing price for Chevron on that day was $71.68. Today, it closed at $89.87, up an astounding 25.3%. Okay, that's significantly less than 2 months, guys. And again, that's not including, at that time, I think it was around a 7% dividend. The third one, stock rather, was Intel. That was October 31st, and the closing on that stock that day was $44.11. Today it's $49.90. That's up 13.1%, not including the dividend, which is around 3% at that time. Then the most recent one was Boeing, November 23rd, like 9 days ago. And that closed on that day at $199.62. And on that video, I said that I would wait a little bit to see if it would sell off. It hasn't yet. It did nothing but go up since then. And it closed today $223.85 a share, up 12.1% since it was recommended. Okay, so all these stocks have done very well. I have to mention, though, that the market overall, since the end of October, has, for the most part, been going up and rallying to new record highs. So that certainly helped all of these stocks, although there were certainly other factors that so far have led to the success of these positions. Okay, so now I want to tell you about some of the tools that I use, which are largely technical indicators that help me in my trading and also my investing activities. Now, just a couple words. I do trade. I like to trade. It's fun, and it can be quite profitable, although I want to state that long-term gains in the stock market, just like any other investment, whether it's real estate, stocks, whatever, the best returns, the greatest returns, and the way people truly get rich is over the long term. But you can use these tools either in short-term trading or in long-term investing. It doesn't matter. They can help you in both areas. All right, so I'm going to share my screen with you and go through a couple of these tools with you right now. Okay, so here we are in my trading account, trading/investment account. I use E-Trade. I know there are a lot of platforms, a lot of great platforms out there. I'm not necessarily pushing that. I've just used it for many years. TD Ameritrade is probably a better platform to use. The Sink or Swim is great for options, etc. But, I've used this for a while. I'm comfortable with it, so I continued using it. But I want to talk about basically 5 technical tools that I use for trading and investing, because I believe that where you enter a stock and where you go into a stock is very, very important. It's just as important as where you sell a stock. So here you see basically my detailed charting setup here. In the top, I have what's called Bollinger Bands. Okay, and I'll explain each one as I go along. Next, I have what's called slow stochastics. Next one is relative strength, right? RSI. This one is momentum. And then the last one is money flow. Okay? Now, probably the most important one that I use is the Bollinger Bands, and let's just take a look at what exactly they are. Okay, let's go over here. I'll just read this. The Bollinger Bands are a type of price envelope developed by John Bollinger, and the price envelope is defined as an upper and a lower price range level. The Bollinger Bands are envelopes plotted at standard deviation level above. That means 1 standard deviation above, 1 standard deviation below the simple moving average of the price. And what these Bollinger Bands are intended to do, as you can see here, is show you when a stock is extended in price and when a stock is in the lower band where it is oversold. So it basically is an indicator of being either overbought or oversold based on a moving average of the stock. And I think that these Bollinger Bands are very effective at pointing out when a stock is overvalued or undervalued. Okay? And you can research this more on your own. This isn't by no means a definitive description of Bollinger Bands. You can go a lot deeper into what they actually mean. But when we go back here, the way I use them is, you can see, let's just take a look at, this is ExxonMobil. Let's use it as an example. This would be a high point, and you can see shortly thereafter it sold off. This is a low point. And notice how the bands narrow when the price goes into an oversold position. The bands narrow. Now this was ironically October 28th, right? Was the actual low point in this cycle of this stock. And if you go back and look at a lot of stocks hit a low point and a very attractive entry point in that end of October period. Okay? So you can see here the low. Now, when I recommended on October 10th, you can see it wasn't the absolute lowest point. It wasn't the absolute lowest point. It was a low point relative to up here, but it wasn't the absolute lowest point. And realistically, it's very difficult to buy any stock at the low point. So, don't even try. But when you see this oversold position up in the Bollinger Bands, then we go down to the next one, which is slow stochastics. Okay? And what I like to do is I like to find a position like right here where both the Bollinger Bands and the slow stochastic is showing an oversold situation, right? And this was, as I said, if you look up here, this was October 28th, which would have been an unbelievably great time to buy ExxonMobil. But let's take a look at the slow stochastics, all right? The slow stochastic oscillator is a momentum indicator that shows the location of the close relative to the high and low range over a set number of periods. Okay, so again, what this is really doing is, you can see down here, it's showing oversold and overbought time periods where the lines cross upward and downward, and you can see when these oversold and overbought conditions exist. And as you go over here, you can see that there is a relationship, right? Now let's go to the relative strength indicator, RSI. You can see when this goes below 50, it is a lower relative strength. When it goes above, it's a higher relative strength. This just means relative strength relative to the price movement of other stocks. Okay? So you take all of these together, and what I do is I check them all off, and then I come down here to momentum. And anytime this number is below 100, it has less momentum than other stocks. And when it's above, it has more momentum. Just another indicator to, verify that we're in an attractive period. And then finally, I look at money flow. Okay? And again, money flow, if we look here, we can see that on this October 28th, all 5 indicators were, well, this one's heading toward oversold. It's not quite at oversold. But all of these were at a low point, and they were all in sync. So what you try and look for, if you're using these 5 indicators, is to try to get them all in sync so you can see the low points. And conversely, if you're trading, right, you can see up here in a like manner, it hit a high point, it went above the Bollinger Band, indicating an overbought position. Here, the slow stochastic is in the overbought position. To be honest with you, I look at these two. When these two line up, that's when I start paying attention. These 3, in my mind, are secondary, but they are important. When they all line up, then you can be pretty certain that you're seeing either an oversold or overbought position. Here, it's slightly overbought, the RSI. Here, momentum is clearly peaking. And here, even the money flow index indicated a spike in money flow going into the stock. All right. Now you can set these up in your trading account. If you can't set these up in the platform that you're on, I would definitely switch platforms and go to more of the major platforms. But all these platforms should have this kind of a thing set up so that you can use them, and you can use these indicators again for both trading and for investing. Now, one more thing, I also use them for options trading, but we're not going to talk about options trading in this video. That's a subject of another video. Hey, so thank you for joining. I'm going to put up links for 2 additional videos that you should definitely check out that continue along the lines of what we've talked about on this video. And I hope that you like, and I hope that you subscribe so you can be on board for future videos which will be coming your way real soon.